What's up, you guys? Zoeb here from OneGlanceTrader.com, and I wanted to do a follow-up on last week's video where I shared my 10 pips a day trading strategy. And I've received so many comments, emails about this strategy, and it seems to be the best strategy that has resonated well with my audience, and I'm glad you guys are finding some huge successes with this. And if you guys are brand new to the channel, I'll link to the original video in the description, or you can check that out in the top right hand corner. And because you guys have asked me so many questions, requested templates, reward to risk, all that kind of good stuff, what I've decided to do is do some more videos regarding this strategy, and I wanted to kind of share this on the channel as well. So in this particular video, what I wanted to do is share with you the template of how I set up my charts. And if you guys are not new to my channel, you guys will know that I kind of have a kind of rigid setup in terms of my chart. So I wanted to share that with you. And then secondly, I wanted to show you how I approach the amount I want to risk per trade. So firstly, let me go through the template, because the template then will walk us through how I kind of organize my risk. And what I've also done is I've created a Google Sheet, which I'll link to in the description, which will walk you through on how much risk you need to put on per trade. So if we start with the template, again, the template is absolutely free. Links inside the description below this video, so you guys can get that straight away and implement it on your charts. And so the first thing is the classic OGT trend dashboard, and this has been updated with version 1.2. And for those of you who have got the trend dashboard, you guys will be happy to know that you do not need to update the symbol or the pair every time you upload a chart. There is a new feature in version 1.2 which will do that based on the current chart you are, so that will save you a little bit of time there. And again, I'll link to the OGT trend dashboard version 1.2, or the overall playlist. You can get that link in the description or in the top right hand corner. So that's the first bit in there. And again, I've set it to only show the 4-hour, the daily, and the weekly. So you guys know I like to trade this system on the 15-minute. So kind of anything before the 15-minute is going to be, in this particular example of the pound CAD, is everything's just pretty much going to be up. What I'm interested in is understanding if in this particular example is that we wanted to go short in this particular trade, is are the longer term time frames also pointing down, or they're pointing up, or are they ranging? Now, and again, I'll go through this in the risk calculator in a second. It's not to say in this particular example, let's just say that at the point of where the ADR hit 100%, that the H4 was red and the daily and weekly are green. It's not to say that I wouldn't take the trade, is that it plays a role in how much risk I put onto the trade. So again, I'll go into that, but that's the reason why I've got the OGT trend dashboard, so I can see what that longer term time frame is. Am I trading with that longer term time frame? And then I can manage my risk accordingly. The second thing I've put on the chart is the round number lines. Hopefully you guys can kind of see that the lines in this case are just showing the 00 lines in blue here. And again, why is that important? We know, and I've done lots of videos on this, is that when price moves towards a round number level, price tends to haul or starts to range or potentially reverse. So I want to know where the round number levels are, not only in relation to the kind of ADR, but also in terms of profit targets. And that's a bit more of an advanced technique. And I know some of the questions are around the reward to risk of 1-to-1. Is that, too little, too high? Do I let my runners go? And all that kind of good stuff, where I'll do more in-depth videos on that. But for this particular video, this is all about, how much to risk in the particular trade. So, and that's what I'm interested in understanding, where the round number level is in comparison to the kind of ADR. So that's the second thing. That's a key component. The third thing, obviously, is the ADR, because you need the ADR to understand if it hits 100%. And again, all you'll need to do is adjust your time frame and session according to your broker to make sure you got the start of the day and everything correct. and also it will already be set up so that the alert for 100% is selected to true as well. So therefore you get the notification, so you don't need to be staring at your charts on the well, staring at your charts all day. I've also added in to make sure that it does show the kind of pip range movement, because again, that element again does factor into the overall element of how much to risk, and I'll go on to that inside a second. The next bit is obviously the RSI MTF indicator, which again is where the RSI is overbought and oversold on multiple time frames, and again it's set to 70-30 in terms of the overbought oversold levels, and the time frames is one time frame higher. So the RSI needs to be overbought or oversold on the current time frame, which is the 15-minute, and one time frame above, which is the 30-minute. And like you guys have seen, and you guys have commented on this, that 99% of the time, that every time you get a move towards the to the ADR, you do get the actual arrows there as well, because of the kind of nature of the move. And then the last bit is, it's not really part of the strategy, but again it's more for advanced levels in terms of take profits and things like that, are the kind of moving averages, and these are kind of the guppy longer term moving average, and again I'll link to that inside the description and the top right hand corner, so you can kind of use that, and it's just more of a guide or an aid. And an example of like how to use this would be, you can see over here is where you've got again price coming down to a round number level, yeah, and as you can see price has halted at that level, and also you can see that the moving averages now are becoming a nice little bed there for additional support. And again, I don't want to go into an advanced levels of here, is that you do have hidden bullish divergence, and price is making lower highs, and the MACD is making lower lows, which indicates price then can potentially go back up to the upside. So again, I'm not going to go into the entry signals and everything. That's all in the previous version. But looking at this blindly, you'll have been out of this trade anyway, because it would have been a close of the session. That's part of one of the simpler kind of exit strategies is, an hour before New York is closed, you want to get out of this trade. So you would have ended up in profit on this trade, but for me, as soon as price came to this level over here, and touching this, and then starts to break down outside of this, and then you see this crossover. This crossover definitely would have been the last point of I would have been out of this trade already, because again that gives me the confirmation of bullish hidden divergence. So again, I'll do more videos on entry, exits, and all that type of stuff. But in the first video, I kept it very simple around a one-to-one reward to risk, because this is kind of a, from what I can see, I've not built in the ES, so I've not backtested this for many years. Is from what I'm seeing at the moment, I'm seeing a good high win percentage, but again managing my risk accordingly. So those are the elements and the framework in terms of the template. You guys can get that a link in the description. And what I wanted to kind of walk you guys through now is a guide. This is all a guide, right? This is what I personally use. Again, you guys do not have to use this, and you can change the numbers around to kind of give you a view of how much risk that you want to take. But again, these are the elements that I use for the trade. So again, unless something intuitive comes into play, and these setups here, for example, I would be taking all of these trades. The question then becomes is firstly, how much do you risk, which I'll talk about in this video, and where do you set your stop, and where do you take your take profit targets, which I'll discuss inside another video. So in terms of the risk, I have built this Google Sheet, which I'll link inside the description, and it kind of gives my perspective or my view of how much you want to risk throughout the trade. So, and like I said, there are three elements that it takes into account. It's what the trend dashboard is doing and what the longer time frames are doing. Where are we? Where is the ADR in relation to a round number level? And how often does the ADR go above 100% of whatever the today's daily ADR is. Those are the three elements that I take into account when determining how much risk I put in there, and hopefully this will give you guys some confidence as well, because then if you do get stopped out, hopefully you are getting stopped out where your risk is, in this example, between 1 and 2%, and the 3% or the 4% are are less likely to lose. So again, you can have, if you're doing a one-to-one reward to risk, and I go through this in my kind of Confluence videos, and I strongly recommend that if you are interested in this type of stuff, A, it's very important, and B, you should understand that you can still reward to risk or one-to-one. You have to be profitable, you have to have a win rate of above 50%. But I've proven that you can do that without having a win rate of less than 50%, because one element is you assume that you trade the same risk every time, and that is the key factor. Is you shouldn't be trading the same risk of 2%, 2%, 2% of what we've been taught every single trade. It's all about probability, and certain market conditions will give you higher probability of doing that, and this is what this is trying to do here. And again, you can add your own twist onto this and add some more layers of Confluence or whatever you want to call it onto it. So you can do that. You could put divergence inside here. Again, divergence is not something I've added onto this, but again, you can put that into there as well. And again, this spreadsheet or this Google sheet may evolve inside the future. But again, I didn't want to complicate it with divergence. I wanted to give you hard, fast rules that is quite basic and quite easy, because divergence is something that is kind of, intuitive to a certain extent. So what I'm going to do is I'm going to go through all of these with you and use this particular example of the GBP CAD in terms of how much risk I would put onto this trade. So the first thing is looking at the trend dashboard, and again, the values I put is 1, 2, and 4%. So the least our risk is 1% and the max our risk is 4%, and very rarely do you get all three of those kind of put in. So the kind of max risk, when you take the average of the three, is around 3%. And again, it will, I round it up, round it down, and you'll kind of work it out as we do some more examples. So the first one is understanding is of the 4-hour, daily, and the weekly, is how many of these time frames are in the direction you want to trade. So let's just assume that, because again, this is up to date at the current time, let's just assume that this is correct. At this level, when you get the alert that the ADR is hit 100%, the first thing we look at is where we are in relation to the kind of higher time frames. And as you can see here, that the daily and the weekly, and again, you can program this in to give more weighting to the daily or the weekly, but I've kept it very straightforward, and I might enhance this as time goes on, is that we have only one time frame that is inside the red, which is the H4. So as you can see here, we can do there, and then sorry, this should really be 0 to 1, because again, you might have all of them green, for example, or all of them gray, as a particular example in this thing. So in this case, we have one time frame which is red, so therefore we put it at the lowest denominator at 1%. The next thing, as I mentioned, is where the ADR is in relation to the round number level. And what we're looking for the round number level to be as close as today's ADR as possible, because that gives us the strongest probability of not only of a reversal, but a strong reversal as well. So the kind of thresholds I've put in here is I'll work down to up here, is if it's between 0 and 5 pips, again, should be 0 to 5 pips, and then this shouldn't have or more on here. If it's between 0 to 5 pips, then you give it 4%. If you give it between 6 to 10 pips, you give it a value of 2%. And if it's 11 pips or more, you give it a value of 1%. So if we have a look here, and again, doesn't need to be exact, looking at here, it's around what, 8 pips, something like that, 8 or 9 pips, which then puts us into the second bracket of 2%. Then all you do again is already in there. You just stick in 2 inside the calculator here. So that's the second element. And then the third element, which I didn't really accounted for a lot, but I started to do this in terms of looking at potential moves and momentum, is understanding over the last, I think it's 100 days, which is set in the ADR, how many times has price or the volatility been higher than the current today's ADR. And if you think about it, that's quite important. It's quite important to know how many times that over the last X number of days that the pip range movement is higher than what it currently is now when it hits 100%. So what we're looking for here, we're looking at this reading here of 100% plus. And if it's below 30%, so therefore it doesn't happen that often, you want to give it a higher rating, so therefore it's more chance of a reversal. If it's been 31 to 44%, we give it a 2% rating, and if it's greater than 45%, we give it a 1% rating. So you can see here it's at 47%, which is, it puts it in the higher category, so therefore pretty much 50% of the time, 1 in 2 chance it will go higher than that amount, and that could just be 101% and then kind of reverse. But for the purpose we're looking at where it's actually an extreme, which doesn't happen very often. So again, we put that at 1%, and therefore the calculation here is just an average of the three, and therefore the total risk will be 1%. And you can change this around here. You can put 4 over here, and then 4 here, and therefore gives you a total risk of 3%. So these are just examples here of what of what you can do. But in this particular trade for the GBP CAD, you are going against kind of the longer term time frame. It generally, even though it did hit 102%, so therefore it would have included in this figure here, it has been higher than it. It's very close to a round numbered level, which is good, and therefore we've adjusted that into account. And this calculation assumes that all of these 3 things are weighted equally. And again, I can evolve this over time if you guys feel that the trend dashboard is more important than the ADR being over 100%, because this calculation could be 101% every time at 80%. So I kind of get what that means. So again, for this particular one, when I release this video, it'll be as basic as that. But let me know what your thoughts are if you want me to kind of improve on this calculator to give you a better kind of justification or weighting on how much risk you want to do per trade. So I really hope that you guys found this useful. Get the template, have a play around with the risk calculator. Again, this will heighten your trading and get you better returns inside the long run, instead of doing the same old 2% risk, because you're not really taking into account market conditions. I really hope that you guys enjoyed this video. I'll be doing more videos on this, and again, I'll link to it right now if you guys haven't seen part 1 or the first video. And again, I'll link to my Confluence videos right now, so you guys can watch that, so you guys can see how the risk of trading comes into play, and it's very important for long-term success. So really hope you enjoyed this video, and click the videos on the screen now.